Why do I want this in my portfolio to begin with? What are the benefits of private credit? And we've hit on some of it already. There's certainly a part of the market that you can access that may not be available to you if you're only invested in public markets. And anytime you're investing in a different segment of the global marketplace, you can think of there being a diversification benefit to that. It may not perform exactly as your public market investments do, and therefore you may get some benefits in terms of diversification where that segment does well when other areas may struggle. And conversely, it may not do as well when other segments of your portfolio are doing really well. The other potential benefit is the idea that oftentimes the returns in this segment will outpace some of their more conservative, if you will, public fixed income market peers. In other words, they can deliver higher returns in the private market segment by loaning money to some of these smaller mid-sized companies that aren't a part of the public investment universe. Now, I say those two characteristics being diversification and higher expected returns, and both of them have trade-offs. One of which is on the diversification side, oftentimes what investors may see or point to is the low volatility or low correlation characteristics of private credit versus what they see in the public market. And it's important to remember when you look at public markets, that's getting priced and updated every single day. And you can't compare that volatility characteristics or how the price dispersion works in that market to a market like private credit or privates in general, where the pricing is updated far less frequently and is often done through an internal mechanism where the fund managers are evaluating what is the appropriate valuation of a particular loan. And so you really can't compare the volatility of that asset class to something that's getting priced every day in the public market and treat them as apples to apples.